Hello, everyone. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are down mixed today. Dow Jones is down 0.5%. NASDAQ is up 0.2%. S&P 500 is up 0.2%. Russell 2000 is down 1%. Stocks are mixed, except for Tesla. Tesla is down 10%. We're going to get into why. Oil is up slightly at $65 per barrel. The Treasury yield curve is flatter a little bit. 5-year Treasury yield is at 3.96, 10-year is at 4.40, and 30-year is at 4.94%. Initial claims came in lower than expected today. Continuing claims a little higher, closing on at 2 million. And new home sales were lower than expected. Let's dig into Tesla results. Tesla shares fall amid delays, distractions, and fading EV dominance. Tesla's sales shrank nearly 7% in pre-market trading on Thursday as the EV giant grapples with sinking sales and mounting doubts over its future under CEO Elon Musk, deepening investor anxiety after another shaky quarter. Musk warned of a few rough quarters ahead for Tesla as cuts in US EV incentives compound its challenges. The automaker reported one of its most difficult quarters in over a decade, marked by a second consecutive revenue slide. This comes amid slumping EV sales, tariff pressures, and fresh controversies around Musk, fueling turbulence for the company at a time it can least afford it. Tesla is working on a cheaper model, but CFO said production would ramp up next quarter, slower than initially expected. The company gave no update on its annual deliveries forecast, citing the economy and uncertainties looming over its rollout plans. Quote, Tesla's crossing the chasm to autonomy while absorbing slower volume, EV incentive elimination, tariffs, and investing in new initiatives that may not make margins for years, analysts at Morgan Stanley said. The company's $1 trillion valuation hinges on its robotaxi ambitions, a small trial of which was started in Austin, Texas last month with about a dozen Model Y SUVs and is pushed to build humanoid robots. Despite a recent facelift for its flagship Model Y, Tesla's aging lineup is facing the heat from a wave of low-cost EV rivals, especially in China, and ongoing blowback over Elon Musk's far-right political views. Musk is the face of Tesla, and for many people, the brand can't exist outside of his influence. So when his credibility and trust decline, so does the equity of Tesla brand, said Daniel Binns, global CEO at Elmwood. In parallel, we've seen the EV market rapidly mature, and Tesla is no longer the shining star, Binns added. Tesla stock is down about 18% so far this year, making it the worst performer among the Magnificent Seven stocks. Let's dig into some key takeaways. This is specific takeaways. 1. Steepest revenue fall in a decade. Tesla booked $22.5 billion in Q2 revenue, down 12% year over year, while adjusted EPS slid to 40 cents. Both figures undershot street optimism and marked the sharpest top-line drop since the Model 3 launch era. 2. Automotive engines stalled. Core auto sales fell 16.6% to $16.7 billion, and deliveries slipped 14% to 384,000 units, despite aggressive price cuts and 0% financing offers. Mixed degradation outweighed cost savings, pushing GAAP auto gross margin to 15%, half of its 2022 peak. 3. Margins hanging on regulatory credits. Operating profit collapsed 42% to $923 million, and nearly half of that still came from selling regulatory credits, a revenue stream management admitted will largely disappear once U.S. policy changes take effect later this year. 4. A few rough quarters ahead. Elon Musk warned that expiring U.S. EV tax credits and higher tariffs could create rough quarters before self-driving software and services revive growth by late 2026. Investors should push out free cash flow inflection in any discounted cash flow analysis. 5. Robotaxi leaves the gate slowly. Management confirmed paid driver out service is live in Austin with a widened service area and plans to add more states, but emphasized regulatory approvals and support costs will weigh on near-term earnings. 6. Affordable model enters first build phase. Tesla said initial builds of a lower-cost Model Y variant began in June. Meaningful volumes is now slated for second half of 2025, a slower ramp than builds modeled. CapEx front loads while the revenue contributions slide to the right. 7. Optimus still moonshot, but the bill comes first. Musk called Optimus V3 our biggest product ever, scheduled for end of 2025 prototypes. Tooling, integration, and AI chip spend will land in 2025, 2026 before any humanoid robot sale appear in the P&L. 8. Energy storage record on paper, wobble in reality. Trailing 12-month Megapack deployments marked a 12-quarter record streak, yet Q2 installs slipped for a second consecutive quarter to 9.6 gigawatt hours, hit by tariff hikes and subsidy cuts. Projects penciled in IRRs written 6 months ago now look thin. 9. Cash cushion is shrinking. Free cash flow was just $100 million, and quarter-end cash fell $200 million to $36.8 billion, reflecting inventory build, robotaxi capex, and buybacks. Management reiterated ample liquidity, but guidance no longer rules out a negative FCF print if demand softens further. 10. What to watch in second half of 2025? U.S. EV credit repeal. I mean, this is the elephant in the room. If Tesla has near zero free cash flow and operating margins declining to record low levels, barely profitable, even with credits, what's going to happen when these credits disappear? My guess is that Tesla is going to start generating losses. I think Tesla is going to start generating losses, and I think energy margins have also peaked. So I think rough quarters ahead is a nice way of putting it. Robotaxi safety driver removal in additional states, possible. Maybe in California, we'll see. Megapack backlog repricing under new tariffs will determine whether energy stays growth engine or margin drag. Affordable model SOP ramp rates. Every quarter of delay pushes out demand recovery. Optimus V3 prototype reveal. I mean, Tesla was supposed to produce thousands of them this year. I don't think that's going to happen anymore. Q2 confirms Tesla's a painful transition from hardware-led growth to software, autonomy, and robotics. I think this is, I continue to believe Tesla stock is worth about $100 per share. And on top of that, this is an Electrek article, Tesla's own data confirms autopilot safety regressed in 2025. Fred Lambert says Tesla released its autopilot safety report for Q2, confirming that autopilot safety has regressed so far in 2025. The report shows a decrease in miles driven between crashes with autopilot engaged compared to the same period last year. This regression is significant, especially considering Tesla's limited data release and ongoing legal challenges over false advertising of autopilot and full self-driving features. The report's methodology, which only includes crashes triggering airbags and excludes minor bumps, is also noted in the article as flawed. There's a lot of other flaws with this report. So that's that on Tesla. Let's focus on a few other company news. Alphabet results take S&P 500, NASDAQ to record highs, Dow falls. The S&P 500 and NASDAQ hit record highs on Thursday as major technology stocks rose after mega-cap Alphabet's robust earnings, while the Dow was weighed down by losses in IBM, United Health, and Honeywell. Alphabet rose 2% after the Google parent raised its 2025 capital spending forecast by $10 billion to $85 billion, shrugging off trade jitters and reinforcing investors' confidence in AI investments and returns. Shares of Microsoft, NVIDIA, and Amazon were up between 1% to 2%. Losses in United Healthcare, IBM, and Honeywell weighed on the blue chip Dow, which fell 0.3%, though it remained close to its December 4 record high. United Health lost 4%. The insurer revealed it's cooperating with the Department of Justice probe into Medicare practices following reports of both criminal and civil investigations. IBM dropped 8% as the second quarter results fell flat with investors hampered by disappointing sales in its core software division. Honeywell, meanwhile, dipped 5% despite topping Wall Street's expectations and raising annual look. We talked about Tesla. On the trade front, an EU spokesperson hinted that the deal was within reach, one that could slap a broad 15% tariff on imports across a 27-member bloc, according to diplomats. Meanwhile, fresh signs of progress emerged after President Trump struck an agreement with Japan, slicing tariffs on Japanese goods to 15%. China and South Korea were also scrambling to clinch their own deals and sidestep Trump's hefty duties. Some of Wall Street's heavyweights were starting to feel the sting of Trump's sweeping tariffs. American Airlines fell 9% after forecasts had bigger than expected third quarter loss, hurt by sluggish domestic travel demand. The US trade war has created the biggest uncertainty for the airline industry since the COVID-19 pandemic. Markets were also monitoring Trump's surprise visit to the Federal Reserve's headquarters later in the day. Wow. Which followed months of the president criticizing Fed Chair Powell for not cutting interest rates. With the Fed widely expected to hold rates steady at next week's meeting, traders are now pricing in a 60% chance of a September rate cut, according to CME's FedWatch tool. The latest Labor Department report showed weekly jobless claims fell to 217,000, well below estimates, signaling continued resilience in the U.S. job market. In my opinion, the initial weekly claims have bottomed, and I think it's going to go up from here. U.S. business activity gained momentum in July, but companies hiked prices on goods and services, a move that's fueling economists' predictions of faster inflation in the months ahead, largely driven by rising import tariffs. All right. I think that covers everything I wanted to discuss today. On that note, thank you very much, everybody, and I will chat with you all next time. Take care.